Yeah, hello, back again. This is now a small chapter on later changes in the price as it's regulated in paragraph 17 UStG of the German Umsatzsteuergesetz. And the aim of this chapter is to bring you into contact with the basic ideas behind that paragraph. Well, let's start. How can prices change in the course of time? Well, let's start with a small example. Imagine a customer pays €100 for a product in January, and later in March of the same year, the product proves to be not working as perfect as one imagined when you bought it. And so you go back to the shop where you bought it and tell them something about warranty or guarantee period. This is not what I paid for, and one agrees to give you €20 back in order to settle your claims and to have you satisfied. Good. Now, all what the supplier receives for the product is now first €100, but later the amount drops down to €80 because then you get a kind of a discount or a payback. And had you given the discount of 20% immediately, then it would have been only €80, and it does not change the situation if first the seller tries to keep the 100 and only gives you back 20 later if something goes wrong. In the long run, all what the supplier gets for the product drops down to 80. So how does one deal with such situations? That's the question. From what I said just now, in the long run, it's only 80. It should be clear that in the final or in the long run, only 80 should count for the tax base. Only 80 should be the gross amount on which we base our tax calculation, because only 80 is what the supplier can keep. Now, the legislator decided to approach this sequence of events as follows. When the product is sold, you have to declare what you did, and then you have to declare what you will get for the product, all what you get for the product. And all, you remember that, is all from now on till the end of eternity. So you have to make a prognosis. And the reasonable estimate is, well, I got now 100 and I assume that's going to stay this way. I'm going to keep these 100. So you base your tax declaration on 100 gross price and split it up into 84.03 net price and 15.97 VAT. Now later, when the change occurs that you have to give back 20, the old calculation becomes wrong in the retrospective because now the gross price which you could keep was only 80, so that now the net price drops down to 67.22 and the VAT drops to 12.78. Now the only question which we still have is how we deal with that under a technical aspect, so from in the tax declaration. How do we communicate that to the fiscal office? In principle, you could bring forward the idea that from what you know now, your tax declaration of January was wrong. You have now the information that the 100 was wrong and 80 should have been correct, but you couldn't know it at the time. Now, one could say, okay, we allow you to correct your tax declaration for January, and so you change 100 into 80 and get the exceeding VAT and so back, because that has turned out to be an error, the 100. Now imagine what that would mean under a practical aspect. Merchants who sell a vast amount of things are always confronted with people coming in and complaining, and very often you have to find a compromise and give them some money back or so. Or it might be that somebody pays in installments and then goes bankrupt, so that you get the information you didn't get all the installments, so you have to correct the price. The problem is, probably now in March, what would happen? Perhaps you have to accept the reclamation of somebody who got something sold in January. Somebody else drops in and complains about something which was bought in December. Somebody goes bankrupt who bought something to be paid off in installments in November. So in March, you would have to change all the former tax declarations for every month of the last, let's say, 2 or 3 years. And that would be a complete chaos, especially since probably in April there would be again people dropping in and having other complaints on other products from January, so that you would have to change the January declaration again and again and again. So it would be a constant change in every tax declaration for every month for years, and that, ladies and gentlemen, makes no sense. So the technical solution, which the German law and I believe the law of other countries in the EU took in order to deal with the problem, is far more simple. They just say, let the original tax declaration unaffected, unchanged, so don't touch January anymore. Just communicate in March the change of the tax base. So in March, you give back 20 euro on a taxable transaction from January. So the gross amount for taxable transactions goes down by minus 20 in March. And now we split that up into the net amount of 1681 and 3.19 euro VAT. So you have a negative VAT amount of 3.19 euro for March. Now, if you then add up all the tax declarations over time, here the January and the March one, you find out, surprisingly, that the total is absolutely correct. In January, you communicated a net amount of 8403. In March, a negative amount of 1681. If you add that up, you end up with 6722, which is indeed correct for a gross amount of 80. The VAT 1597 in January was paid. Now you have a refund claim of 319, a negative VAT in March. If you add that up over time, you end with a total which is 1278, and that is absolutely correct. So this method is far more convenient and easier, that you just communicate the amount of the change in the moment when the change happens, instead of correcting all the tax declarations or preliminary tax declarations of all the recent months, because that would end up in an enormous chaos. So things can be made easy. Everything which happens in March, the new sales of March and the changes in old transactions in March, which happened in March, are communicated in the March tax declaration. So you always have to hand in only one tax declaration and don't have to correct all the old stuff every month. The relevant source for this insights is paragraph 17 UStG. So there you find the German law's command that changes in the VAT tax base and in the tax have to be declared in that preliminary tax period during which the change happens. Well, and then again, the art is, or a master of the art shows itself or reveals himself or herself just by seeing that the word happens means happens and not where a change is expected to happen, where a change is feared, where one prepares oneself mentally for a change in the tax base, because that is not yet a change. A change in the price only happens under the rules of VAT law when the change is definitive. So, examples. Imagine you are a merchant. You sold to a customer something, and You sold it on credit. So the customer still owes you the full payment of 100,000 euro for a machine which was delivered last week. Now you get the information, oh my God, this customer has financial problems. So you begin to pray, oh my God, is it possible? If it is possible, make it possible that this customer still can pay me. But under commercial law, under the rules for bookkeeping and accounting, you will probably correct the value of your claims in the books already downwards. Under the principle of prudence, you should not show yourself richer than you are. So if you fear that with a probability of, let's say, 80%, you never see that money, you probably reevaluate the claim of 100,000 and say, perhaps statistically I see some 20,000 still, but not more. So you would already book an impairment. Now look to the VAT situation. Under VAT law's perspective, nothing has happened yet. There has not been a change. You only fear it. It is still possible that your customer might pay. So until now, no chance to make a correction. Now, another example. Merchant M delivered a machine for a price of 200,000 to a customer some time ago. The customer has to pay installments of 50,000 each month, and after 2 months the customer has a reclamation, comes in, complains, makes a fuss, and the two of you agree on a reduction of the price. The price is lowered by 40,000 to 160,000 only. Now, up to now the customer has paid 100,000, and now you reduce the outstanding amount to 60,000. So from that moment on, when this agreement has been signed, the change has become effective because customer complained, you accepted that, both agreed on the outstanding price amount goes down immediately when the ink is dry under the agreement, and so the change has become effective, and you can now correct and communicate the change to the fiscal office. Minus 40,000 gross amount to be declared as the corresponding minus net amount and the minus tax. So that can be and has to be declared in the moment when you accept that change of the price by change of the agreement. Now Merchant M has sold a computer for 1,000 euro some time ago. The price was fully paid by the customer. Later a defect is detected, but it doesn't impact the usability. It does not really spoil everything, so the computer still has a value. Customer and merchant agree to a reduction of 20% of the price. So the agreement is made on the 30th of March, but the money is only given back on the 5th of April. For example, you do that agreement over the telephone. You say, next time when you come in, I remember that, I make a note, then you get the money. Now, until the 5th of April, you still could keep that money. So the change in what you got for your computer only became effective on the 5th of April, when also the money was given back. Before, a change was only promised. So change has to be declared in April. Now another variant. Merchant M sold a computer for 500 euro, and then there was a problem. Merchant gave the customer a voucher about 100 euro, and that voucher entitles the customer to purchase whatever he likes in the shop of the seller. And alternatively, the customer can also get to the cash tag and demand that the voucher is paid out in cash. I would say, when does the change happen? Well, from the moment on when you gave that particular voucher back to the customer. The customer could freely dispose about the money. So it is probably the same as if you had credited that money to the customer on a bank account, or because this is no longer your money. There is an effective liability to the customer now, which can be demanded to be fulfilled at any time. So you have effectively lost an amount of 100 euro at the moment when you hand it back that voucher to the customer. Unavoidable. So with this specific situation, you can say in the moment when that voucher was handed, and especially since that voucher can also be used without having to start another purchase, so there is no debate when it is turned into money. So here I would say clearly at the moment when the voucher is handed out, this particular voucher, the change has happened. You must also see naturally if I have posted the condition next time when you make a sale, then you get a rebate of 30%. Then it's still not proven that I ever have to renounce on money. The 30% probably is just a discount on the next sale. It did not really happen now. So it's still conditional. It depends on the question if my customer will ever come back and then buy. So in that situation, one could doubt if the change has already happened, because till then you still can take the money. So that is something where a tax department would probably think about twice and look up some literature if there are some court decisions on that. Now, situation number 5, you sold something to a customer. That customer still owes you some money, and that customer has become insolvent. So you never renounced on the remaining amount of the price, but in the case of an insolvency, the claims of the merchant against this customer are usually, in nearly 100% of all practice cases, completely worthless. You can usually, after insolvency, if you have no specific collaterals received, you can usually expect that you see nearly nothing of your claims. And so one can regard the moment of insolvency as having lost any remaining claim from a reasonable point of view. So the money can then be actually considered as lost. So the change has happened. If later, surprisingly, a big part, a small part, or a very small part of the money can nevertheless still be recovered, this would be again a change of the tax base and tax, because in the moment when insolvency happens and you say, okay, that's it, I never see that money which I can claim again, then you would correct tax and remaining tax base, remaining tax to 0. And naturally, if later it turns out that you can still recover some 50 or 100 euro, this would be again an increase in the tax base and the tax. So here a change would perhaps happen twice in the course of time. Well, why not? That's the system which underlies all these things. A change in the price, that is something which you have already seen in the immediately previous example, can also consist in an increase of the price for various reasons. Imagine merchant M delivers a machine to a customer in Russia. Machine costs 100,000, and M is entitled to charge the customer with the cost of the transport. Now the machine is delivered in January. M charges to R from Russia the price of 100,000, which is immediately due under the contract. Now M only gets the invoice of the haulier in February, so he doesn't know the additional amount which he can claim from the Russian customer. So these additional 3,000 euro can only be claimed in March. So in March, a second letter leaves M's offices dear customer R, under our contract, I still have a claim to additional 3,000 euro. So beginning to claim these additional 3,000 is a later increase in the price for the machine from 100 to 103,000. So the additional 3,000 will be communicated to the fiscal office in the tax declaration for March. Huh? Another potential example would be customer C owes to merchant M an amount of 100,000. In December 01, C gets bankrupt. There is no hope. The 100,000 are lost. You declare in December a change of tax and tax base to 0. Now in March 03, C wins 10 billion euro in the lottery. M hears about that. And now it's clear what M does. M says, okay, the guy has money again. In December, there was no hope, no chance that I could ever see my 100,000. But now, my customer C swims in money. And, well, I never renounced on my claim. I only booked it out because there was no chance to realize it. But now I can. So M will just walk away or run to the door the house where customer C lives, knock on the door and say, congratulations to your win in the lottery. I'm so glad you have no other guy in the world who is as happy as you can be. Okay, you won 10 million, so you are happier than I am naturally, but I am the second on the list because I'm so happy. Now let me explain, would it really matter to you to pay these 100,000 outstanding debt now? Because otherwise I would come back with somebody from the authorities and we would force you because you still owe me that money. So then the 100,000 can be recovered again. The claim comes back to life. And so the tax base and the tax still or again go up. Because now situation has again objectively changed. Good. This, ladies and gentlemen, is nothing else than the basic principles underlying paragraph 17 UStG. So whenever in the course of time the payment or the consideration for what you sold to others changes, you must remember this. The total of everything you get over time is the correct final tax base under paragraph 10. But if it goes up and down over time, you will distribute the original amount and the changes up and down over time, according to paragraph 17, over several tax declarations for the relevant periods of time. This is again a small subchapter which we have finished, so be happy that it's finished and come back when we talk about the search subchapter which refers to the tax base. Thanks for watching, come back soon and have a good rest of the day. Ciao.